US markets were subdued, and that is something that we are seeing in the Asian markets as well.
The poll numbers, it's expected to be 5.1 for the fourth quarter.
On the lower end, the Nifty should not break. I mean, if there is a bit of a profit taking which emerges, should not break 18,420.
8% increase as far as high-grade coal of grades G2 to G10.
Mauritius Holdings is looking to sell their entire stake in SDFC Life.
We now reported a net debt of close to 1,200 crores.
The first tick on the index on expected lines is on the red side, so 45 points lower on the Nifty.
The offline pharmacy, it did really well. Clocked in margins of 8% for the first time.
Profits also in line with estimates at 330 odd crores.
Last 3 years, entire focus of the bank would be in terms of customer centric.
The mid-caps are outperforming. The frontline indices have seen some profits being taken off.
In some cases, the concentrated holding have been the same for many years.
The overall average has been 11.82 lakh tickets in a day.
25% rally that we've seen in the last 3 months, and it's very close to its 52-week high.
Banks are taking it on the chin. The Nifty is now below that 44,000.
Well, that was the day so far and how we've panned out this Wednesday. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 News studios. I'm Prashant, with me, my colleagues Rima and Mangal. Guys, hi.
Hi, good afternoon. It just looked like the markets were going to break 18,500 about 10 minutes back, but there has been a little bit of a recovery, particularly the mid-cap index. Pull that up, and it's about a 100-point push up on the mid-cap index just in the last few minutes.
That's right, Rima. I mean, actually, the Nifty is also picked up. I mean, from 2010 or so, it's pulled up nicely. I mean, it's about 30 points, 40 points, but for what it's worth, it's a comeback of sorts. At least the first one, meaningful one that we're attempting. Again, on the Bank Nifty at about 2010, we were at about 43,850, and we've recovered about 100 points in the last 20 minutes or so. So a little bit of pullback is what we are seeing at this point in time. Otherwise, starting that sell-off after 10 o'clock, markets have been in a flattish kind of zone, plateaued out, not really moved anywhere. On the Nifty, I think the levels remain the same. 18,420 is the one which I think should hold I mean, of course, there is a 20-day, but that is some distance away, and this is a moving average which is closer to where we are right now. We got to within 100 points of it, but and with this recovery in the last 20 minutes, some more distance. The Bank Nifty is seeing the bigger cut of the two indices. There, the 20-day moving average stands at 43,705. This is as of yesterday's close. It would have moved up a little bit with today's session. 1:1 advanced decline ratio, I mean, actually slightly favoring declines the last I checked. And across the board, you look at the global screen, it's all negative. US is down about 0.25%. European stocks are down 0.5%, 3/4. And Asia was largely in the red as well. Rima.
Hi, but the truth of the matter is the markets had a phenomenal one-way rally. Just towards the end of March, the Nifty was below 17,000. It was a 16,900 and something, and we almost went to that 18,700 mark yesterday. So in a span, pull up the 3-month chart and you would see what a phenomenal one-way rally we've had in the last 2 months. So the question is this just routine profit taking? Because we did scale all-time highs on the Nifty Bank and on the mid-cap index. So typically, the first time when you get to those levels, there is a little bit of profit taking, which is quite visible. That is the rally I was talking about. Pre-March, towards the end of March, the Nifty was sub 17,000 levels. So perhaps it's just a little bit of profit taking that's visible and not a major reversal. As Prashant pointed out, the global backdrop is subdued. You had deep cuts of more than 1.5% in many of the Asian markets, and Europe too right now is down close to about 0.5% on the key indices. The Nifty Bank is underperforming. The Nifty Bank has a cut of more than about 500 points, and it's trading below 44,000. It's Axis Bank, HDFC Limited, HDFC Bank, which is putting pressure, and the other two heavyweights, Reliance Industries and ITC. Reliance Industries has been quite the drag. Year to date, Reliance Industries has underperformed the Nifty by nearly 5%. It's still about 12% away from its 52-week high levels as compared to the Nifty, which may be 1.5–2% away. So Reliance Industries Industries has been an underperformer, in this rally that we've seen, though it has moved up, not quite commensurate. So today, Reliance Industries is down 1.5%, and ITC too is dragging its feet. So that's exerting pressure on the benchmark.
That is, but it's an interesting thing because ITC over the last couple of days we've been talking about how it's been a big contributor to the FMCG index. But right now, if the director pulls up both the FMCG index and the ITC stock, you would say that the ITC stock is at the low point of trade, while the FMCG index has moved higher. And why is that? Because the non-ITC components of the FMCG index, which is HUL and the likes of Britannia, Varun Beverages, all of them, they're seeing a bit of a pickup right now. So there you have it. The FMCG index has moved higher, even as the ITC stock is lower. Why is that? Because you pull up the intraday chart of HUL, that's moved higher to the high point of trade. You've seen a big move come by on a couple of other consumption names as well. Tata Consumer too has moved higher, as has Britannia. Britannia, in fact, once the clock struck 2, we saw something happen to Britannia. That stock too has moved to the high point of trade. So that's something we'll be watching out for. But, by and large, it's not been a bad session whatsoever for the Nifty, notwithstanding a 100-point cut, because we've been talking about how on the long side there were a lot of excesses which were built. And now that the market's giving back some of those gains, it's bouncing back from important support zones as well. We've seen a bunch of options which were rather active. The 18,550 call and 18,600 call, both of them will come into play tomorrow because it's the weekly options expiry. Those who are writing the 18,550 call are hoping for the market to not go past that 18,600 mark. If it does go past that, we will see a fair amount of short covering. Bulls are pretty steady at the 18,500 put. They are telling you that 18,450 is an important mark of support, 18,450 to 18,460. And the put-call ratio, which was at 1.3, signifying overbought levels, has now moderated to sub-1 levels, closer to 0.92. So that gives some room on the upside for the markets to breathe as well. And the Nifty Bank too bounced back from 43,850. If you look at the 44,000 put out there, it has a premium of 170 odd rupees. So that's telling you, 43,820 to 43,850 is an important support zone. So yes, there has been profit give back, but from lower levels, we've seen a bit of a bounce as well. The mid-cap index, which is outperforming, will be in focus over the next 40 minutes or so, mainly because it is the weekly options expiry for the mid-cap index, which has moved to the high point of trade. But this weekly options expiry does not see that kind of volume. So let's see whether there are some volume pickups that we see in the last 30 minutes.
All right, Mangalam, so interesting data there. Thanks very much for that. Let's quickly tell you what's lined up here over the next 60 minutes or so. KRBL has dipped after its fourth quarter margins contracted 530 basis points, while Suzlon Energy is surging in trade in the back of strong numbers. We get you management excerpts for both those conversations in just a bit.
Apollo Hospitals management says they're looking to dilute stake in Apollo 24/7 and raise $200 million. The stock is trading flat. Key excerpts coming up on the show. The other stocks on our radar from the earnings space are Torrent Pharma and Tega Industries. We'll get you the earnings fine print, and we'll also discuss the way forward for the markets with Ajay Vora of Nuvama Asset Management. All this and much more in the next 60 minutes.
Okay, well, how should you position yourself in the last 60 minutes of trade? That's the question we are asking. As always, Mitesh is with us to help us with that. Mitesh, hi, good afternoon. A little bit of recovery, as we were pointing out earlier. But what would you do? 18,530 on the Nifty, and any fresh trades?
Good afternoon, Prashant. So I think, the breakout on the bank Nifty, which was there, I think that's clearly failed. And we're back to levels below 44,150. And now till we capture that, I think, we'll not get a positive signal from the bank Nifty, though the Nifty structure isn't very bad. So given the fact that there's some kind of dichotomy between the indices, as well as the fact that even for the Nifty, the intraday charts are still mildly overbought, I would, not venture into long position. My sense is that the markets will consolidate. Some cool-off is required maybe after this kind of rally. And the signals point that, for the Nifty, the range could be 18,650 to about 18,450 on the lower side. And for the bank Nifty, I think 44,150 to about 43,450 becomes the range. So I think we'll see some consolidation, some range kind of trading, contracting kind of a market. Hence the index, I think, I'll not be trading them. On the stock side, though, I think a lot of action is taking place. So Bharti is something which appears to have triggered a fresh up move. That's a buy with a stop at about levels of 822, look for targets of 875. And one sell call that's on IEX, it's a conditional sell. It needs to break yesterday's low of 152.5. We've got a low of around 153 today. So below 152.5, short with a stop at 155.5. Look for targets of 145.
All right, Mitesh, that's about the index. All right, so, okay, we'll come back to you during the course of the show. Let's talk about a bunch of stocks which are doing well. Tata Motors is actually the one which has moved to the high point of trade. In fact, this year it's up 35%. So there are a lot of auto stocks we will be monitoring, but also it is the first of the month tomorrow. So we'll be watching out for a bunch of auto sales. Sonia joins in with the key expectations from what the street is working with this time around. Sonia.
Well, thanks a lot for that. As you rightly pointed out, the month of May has gone by and we'll be getting the auto sales tomorrow for the month. Now, this time around, the passenger vehicle sales continue to be quite subdued. In fact, especially in the small car segment, discounts have risen. So that entire pocket could see a low single-digit growth, especially for market leaders like Maruti. The waiting period for few models have risen slightly because of supply constraints. Even if you look at other pockets like MHCV, the demand has not fully recovered to the extent that was perhaps expected. The two-wheeler demand has also seen a marginal pickup this time around. If you look at company-wise expectations for Maruti, Nomura is expecting a low single-digit growth of just 3% in the month of May to come in at 1.65 lakh units. For M&M, because of the SUV segment doing so well, the M&M sales are expected to go up by 24% on a year-on-year basis. Moving on to two-wheelers, Hero MotoCorp sales are expected to rise by just about 7%, while Bajaj Auto could be a 27% rise because of a recovery that we've seen in the export market. Eicher Motors, Royal Enfield sales are expected to rise by 19%, while TVS Motor will be once again in single digits, a growth of around 7%. In the commercial vehicle space, as I said, the recovery is not as well as what the street was estimating. So for Ashok Leyland, for example, the expectation is a 6% year-on-year growth. And for Tata Motors, it's actually a fall of 5% year-on-year. So interesting, this time, once again, muted demand expected in the month of May. And, across the board, maybe slightly better on the commercial vehicle side, but two-wheelers and passenger vehicles continues to be muted. Back to you.
Thank you very much for that. There's quite a recovery underway. Just at about 2:10, the Nifty had gone down to levels of 18,505. We almost thought, given the sell-off, that the markets are going to breach that 18,500 on the way down. But look at that recovery. It's picked up about 35 points in a span of 30 minutes. But individual names, Britannia, Mangalam was earlier talking about it, that spiked 1.8%. Tech Mahindra has moved up 2.5%. HUL is seeing a spike. Tata Communications, Titan, pull up Titan as well. That's up close to about 0.3%. Bharti Airtel, ICICI Bank, JSW Steel, across the board, particularly FMCG, we've seen that pickup in buying. And this is almost reminiscent of some expiry-related, buying that we see suddenly across the board. Individual vertical spikes, but there has been some buying interest. The mid-cap index too is now back in the green. Prakash Diwan is now with us on the show. Prakash, would you look at pre-buying ahead of the auto sales numbers?
So good afternoon, Rima. So I think the auto sales numbers probably are, the behavior of some of the stocks is telling you that the numbers could probably be very interestingly throwing some new, kaleidoscopic changes in the market share game for some of the larger OEMs like Maruti, M&M and Tata Motors. So, if you see Tata Motors, while the expectation on their own numbers is not very high, seems to have clawed into a significant, segment of the SUV category and the electric vehicles category. And that could be probably at the cost of M&M. But then M&M itself has something going for itself, in terms of improvement in the product portfolio and all. While Maruti is probably in an investment phase, waiting to see how the Fronx and the Jimny start contributing, which probably you don't have in the month of May. So, all of that put together is telling you that it's the race to the finish is yet far off for, who's going to be the top contender in this revival phase for automobiles. But I would definitely look at Maruti if it gives you a dip, thanks to a little bit of softness in the month of May for them. Because finally it's going to be lumpy when they start seeing sales realizations grow with these new launches and improvement in the market share from the current 12% of odd in the SUV space. So, and that CNG portfolio is always underrated. So if those numbers also start looking up subsequently, you'll probably be a very good play. But I would be a bit cautious given the run up in M&M. If the numbers are good and the market rejoices, probably it's time to book some profits and stay on the sidelines in that way.
Okay, that's about the auto space. A whole host of other stocks are also reacting to their quarterly numbers. Earlier today, we had a chat with the management of Apollo Hospitals, Suzlon Energy and KRBL. Positive commentary coming in the way for FY24. Let's listen in.
I think the benefit of this model is that it has the strong offline and the online presence. And even though we did incur losses this year, and we have for the past 18 months, we will reach a EBITDA break-even by the fourth quarter. GMV was over the budget with 1,630 crores of GMV, whereas we had budgeted 1,500 crores. We do have an opportunity to raise equity by the end of this year. Some very interesting opportunities.
Could you tell us a little more, if not the names, or at least the quantum that you're looking to raise, how much you're comfortable diluting right now?
200 million.
Okay, so 200 million, and how much are you looking to dilute, as my colleague was asking you?
5 to 6%.
This year we did 664 megawatts in orders in FY23. And as I said, out of the 1.5 gigawatt, close to about 50 to 60% of that is already for FY24. Well, margins should strengthen, as you saw a significant uptick on our Q4 margins. So, we've also been very picky and selective about the orders that we intake, where we have, margins in play. So I think on a console basis, we should continue to be able to maintain the margins that we've reported for Q4.
One is higher proportionate sale of lower margin SKUs. Second is higher average COGS on Basmati. And third is some exceptional items that are coming in as one-time costs have caused a temporary dip in margins. We see this getting restored to a large extent in quarter one, and also hope to maintain the range that we're seeing for the full year as a whole.
Okay, well, some sound bites there. Prakash is still with us. Prakash, any thoughts on Apollo Hospitals? I don't know if you heard the full conversation, but we played out a small excerpt. So now they're looking that Apollo Healthco deal by the end of the year. It's been much delayed, and saying that, well, they're looking for a value of about a little over $3 billion now. I think the number was lower about a year ago, maybe less than a year ago. But they seem to be confident they'll be able to do it this time around. But of course, there is a long runway, end of the year. What are your thoughts?
Absolutely. So, there's still quite some time before things crystallize. And, while they might be very clear on the quantum of, raising the 1,600 crores or $200 million, it could possibly mean the dilution could go beyond 5% to 6%, as is probably expected right now, or the manager would like to believe us to, be the situation. But my sense is the business traction is still some time away. And, everybody's seen how this whole new age businesses take much longer to start turning into a profitable trajectory. So it's not going to be easy. And even if they were to raise that 200 million, which they need for the business, it could probably be at the cost of a slightly higher dilution, which means the valuation might not be as high as what's being indicated. So, so I'm not in a hurry to look at it. As I keep on saying, simpler models, which have also started focusing on ancillary revenue streams like Narayana Rudale, their business model is now proving to be so profitable that it does not have any competitive, intensity to kind of bother about as much as an Apollo or a Fortis, one of these larger ones have to. So, you have a presence in locations where you really don't have much of competition. You have services which are priced in a way that, the competition can't provide that quality at that price point. So I think there's much more happening in this space for some of the mid-sized names. They're not very popular, they're not very big, but Apollo would have to kind of wait for some time. It's done a huge run-up, in the last few years, being the market leader of sorts. But the core business will take some time, and the new businesses will also need some time to consolidate and get on their feet.
Right. It will be interesting to see how it goes, because a couple of days ago we were speaking with Shalby and Medanta, both of them looking to expand their offerings in terms of services and their presence as well. All of them rich with cash as well. So let's see how that pans out, whether these hospitals also get the share of investment that people are looking at over and above Apollo Hospitals. What we'll do is, Prakash, ask you to stay on with us. We'll take a short break, come back. We'll also get chatting with Ajay Vora of Nuvama Asset Management on the other side. You stay tuned to Closing Bell. A bunch of stocks doing extremely well this afternoon. We have Bharti Airtel, which has now moved to the top of the table as far as Nifty stocks are concerned at the high point of trade. And through the course of the second half of trade today, it's been climbing and it's now moved to the high point with just about 2.5% distance from its fresh high as well. Prakash is still with us. Prakash, I wanted your thoughts on a couple of the consumer names, and that's mainly because everyone's been very bullish on ITC, but now after the big rally that we've seen on ITC, valuations are at a premium to their historic levels. Yes, they are at a discount to other FMCG companies, but they've always been at a discount. To its own, 10-year mean or something, the ITC valuations are higher. Secondly, other stocks are now catching up. We have Britannia, we have HUL, we have the likes of Tata Consumer. So do you think after a big rally in ITC, it would make sense for one to reshuffle their portfolio and allocate some money to other FMCG stocks?
So that's a tricky one. First and foremost, people, very few people would want to kind of, get out of ITC for the sheer strength of the dividend yield that it continues to offer, especially if you've entered at, 200, 250 zones. You still enjoy a very healthy yield. That's one thing, Mangalam. Even if the market price is not kind of something which you would want to look at and book out. But what's interesting and since you mentioned the valuation multiple reset for ITC, I think it's now getting recognized as a much bigger opportunity with the optionality of the hotel business and the paper business also kind of getting serious consideration. Earlier it was, always taken aside by saying, oh, this is a tobacco-led business. So you can't compare it with the pure play FMCG things. But now here you have FMCG contributing significantly while the others have also started to. I mean, look at the hotel business. I mean, you had the IPL winners, the finalists staying at an ITC hotel. And that's something which tells you the kind of quality and presence that they've created for themselves. My sense is that the capital allocation that they have been making has finally started yielding better ROE and giving that confidence to investors. So you will not see too much of exits, and I wouldn't recommend an exit. The second thing that on the other stocks catching up, I think Marico and Britannia stand to gain disproportionately given the kind of, revival, the potential revival post-monsoon that I'm seeing in the demand side is something which probably these two will be the first to benefit out of it, given the price point, given the the geographical footprint and the product range that they have. While an HUL or a Godrej Consumer or possibly a Tata Consumer might have to still wait. So I think Britannia has all the right things working for itself in terms of getting back to premium valuations and that moat that they've created in some of the product lines, some of the new launches being so successful in a shorter time span. That's all going to come to help them. So I would believe Britannia is still a buy while ITC is still not an exit.
Okay, well, some more stocks coming your way, Prakash. Stay with us. Tega Industries is buzzing in trade. They reported a good set for the fourth quarter. Profits jumped almost 60%. Vivek is here with more details. Vivek.
Well, that's right. It's a very good set of numbers from the company this quarter and a very strong year-on-year growth, especially when you're comparing Q4 of this year with last year. So revenues high by 37%, EBITDA up almost 50%, margins expanding over 200 basis points, and as you mentioned, profitability high by almost 60%. What does the company do? Company mainly caters to the global mineral mining and bulk solids handling industries, and the company recently went ahead and acquired a company known as McNally Sayaji Engineering from the CIRP route at 165 crores. So a very cheap acquisition being done by the company. And even in the conference call, they were quizzed about that. And what they said was that it marks a significant step towards expanding the product portfolio that the company has to offer. Remember, the company has a pretty significant presence as far as the export market is concerned. Order book currently quite strong at over 340 crore. The other thing that the analysts wanted to know was how exactly the expansion plans in Chile going, and what the management indicated in the call was that it's progressing quite well and doing quite well. FY23 volume growth strong between 16 to 17% on a year-on-year basis. Price hikes too were undertaken of almost 5 to 6% in FY23. All of this boding quite well for FY24 as well.
Okay. Vivek, thank you very much for that. Do you track this one, Prakash? Tega Industries?
Yeah, it did catch my eye given the kind of robust improvement in numbers, but I really don't have too much of insight into it in terms of how it's likely to pan out. But, Prashant, just while we are on this, this space is something which has been ignored all this time because we had very few plays in this. Suddenly, that sector is kind of this mining ancillary, the mining equipment manufacturing is suddenly kind of caught attention because there are quite a few names when I looked into it. And you had, otherwise it's just an AIA engineering, which was probably, what we used to talk about. But there's a small company in Chennai, which is still, I think, an SME listed name, but it's kind of, big enough to be recognized. It's called Tejo Industry. I mean, quite similar sounding. But, the point I'm going to make is that this is a space which will see and attract a lot of capital and attention as we go along. And I think Tega's numbers are definitely representative of that change, that's a positive change that's coming about. And that acquisition that they spoke about, the Baroda-based McNally unit that they took over, it's fantastic because of the kind of relationships and the kind of accreditation they have with quite a few large global players. So that gives them access to supply their products to relationships that were lying dormant with the McNally unit. So lots of synergies. Hopefully that will play out as the management is indicated in the call as well. We'll look forward to that. But really, I mean, I don't have a very decisive view in terms of valuations at this point at $900, whether it's really reasonable or not.
Right. From what we remember of our conversation with the management of Tega here on our channel itself, one of their key products, which is Dyna Prime, was close to around 24% of their revenues last year. This will scale up all the way up to 30%, and that will aid their margins. But the McNally acquisition will aid their revenues by about 5% as well. And also looking at a bunch of other things that they're doing, they expect their market share to increase from about 5% to 6.5% in this fiscal itself. So the street likes the numbers and the projections that the management has made as well. But another stock which is gaining in trade today is Torrent Pharma. After reporting a rather inline set of numbers in the fourth quarter, what is it that the street liked most? Ekta joins in to tell us more. Ekta.
Thanks for that. Well, yes, Torrent Pharma reported what was an inline set of numbers. Revenue was up 17%, margins 29%, profit over 300 odd crores. Now, one of the key growth drivers was India, which was up 22%, aided by the Curatio acquisition. US sales were flattish on a Q-on-Q basis, but there were other markets which grew, such as Germany and Brazil, which really compensated along with India for the sluggishness that we saw in US. Now, a couple of key takeaways. The Curatio margins have improved around 4 to 5% since the acquisition, likely to improve by 3 to 5% more. They have launched a new consumer health program as well to move prescription drugs to the over-the-counter segment, which means the likes of Shelcal 500 will now be available without a prescription and available over the counter. They will be adding more brands to it. They are optimistic on double-digit growth in India. For the US business, in talks with the US FT on remediation for the Indrad unit. Brazil, like I mentioned, strong market, up 26% on a constant currency basis. Largest, most profitable segment for Torrent. Brokers positive. Nirmal Bang buy, target price of over 1,700 rupees, and Antique as well has a buy, target price is hiked to over 1,950 rupees.
Okay, well, stock's doing well. Ekta, thank you very much for that. Ajay Vora is now joining us, head of listed equity alternatives at Nuvama Asset Management. Ajay, good to have you with us here. Good afternoon. Thanks for your time. Ajay, the market's done well, haven't they? Despite, of course, notwithstanding today's slight pullback. And you believe that from here on, the rally will get narrower. Actually, we've been marveling how, broad-based and inclusive this move higher has been with mid-caps, small caps, a lot of participation really, backed by decent volumes as well. But you're now saying things will get a bit narrower. Could you explain that? And which are the sectors which will come out on top through that narrow funnel?
Sure. So thanks a lot, Prashant, for having me on your show. So when I mean, narrower is broadly, on the large cap side, it's no longer, pretty much a consensus trade that everything will move from here on. And maybe, during March lows, we were in terms of the valuation. But now if you look at it around closer to say 18.5, 19,000, we are trading closer to 20 times FY24. So from now on, you need to see, where the growth can actually outperform. And basis the current, the result season also, the Q4 result season, we saw that the expectation was closer to 12-13% PAT growth at aggregate level. And we actually ended up delivering closer to 20%. So there were clear, beats like Tata Motors and Reliance and a couple of other names, which actually outperformed quite a lot. And therefore, what I meant was that, within the index also, the growth may not continue to be secular across all sectors, but it will be more sector and stock specific. And on the other hand, on the mid cap side, we are seeing a lot of action. And a classic example to see over here is that, if you look at the overall GST numbers, the way they have moved, that clearly tells you how the formalization of the economy is helping the companies at the bottom end of the pyramid. So we are seeing 30, 40, 50% growth for most of the companies last year and next year as well. And basis that, this action on the mid-cap side can also continue.
Right. You spoke about things being sector and stock specific. The one sector that really stands out is IT in its underperformance. Actually, there's this tug-of-war always between the Nifty IT as well as the Nifty Bank. It's usually one which moves ahead of the other and supports the frontline index. If you just take a look at the last 12 months, the Nifty Bank has outperformed the IT index by a factor of almost 22 odd percent. However, this year so far, they've both been in line. In the meanwhile, we've seen a big move come by in the NASDAQ itself. And the IT index usually is highly correlated to the NASDAQ. There you have it. In the last 12 months, the Nifty Bank is up 23%. The Nifty IT index is down by about 1%. But this year itself, in 2023, both of them have moved around 2.5% to 3% each. Your thoughts on this IT versus bank sort of move, and where do you think this is likely to go? Is it a good time to start nibbling into the IT space?
So Mangalam, broadly, the way I would look at it is more on a 12-month basis. And if you look at on a 12-month basis, the Nifty IT index is almost flat. Whereas all other large sectors in our country, like auto, banking, cap goods, or even real estate, all these sectors are up anywhere from 20 to 25%. So what you're saying is absolutely right. So even during this period, NASDAQ is up 12%. But we also need to understand that during last 12 months, this sector was still going through a period of earnings downgrade. And now we feel that, considering a significant underperformance versus other sectors, as well as, the bottoming out of the whole earnings downgrade cycle, we may not see a very much runaway rally for the sector. But we feel that, on the mid-cap IT space, especially, one can look to start accumulating with a 12 to 18-month horizon. But clearly, it is more dependent on how the US economy does. And markets are always forward-looking. So our sense is that, large part of the earnings downgrade for most of the companies is behind us.
Is behind. Although... we've not seen any upgrades. At the margin, I still think there are more downgrades than upgrades, right? After the fourth quarter. At a Nifty level, it's only, I think, 1.5%, 2%.
Yeah.
But if you look at, say, the top 100 companies or the top 200 companies, there are more which have seen downgrades as compared to upgrades.
You're right, Prashant. So broadly, if you look at the numbers, firstly at the Nifty level, after we finished, 9 months closer in December with the December earnings, the Nifty earnings growth was tracking somewhere close to 8%. And now we have ended the entire year, which is FY23, with 11% growth. So Nifty EPS for FY23 now stands at somewhere close to 815. So that is broadly in line with, where we were maybe 6 months back. This was clearly the expectation. But as you are right, on the Nifty 100 companies, there has been a few more downgrades, and I think that is more related to the entire IT sector and also certain company-specific issues. But if you look at the companies who are more dependent on consuming commodities, they have seen a reasonably higher margin profile. So if you look at the overall margin profile of Nifty 100 companies, we are back to EBITDA margin of somewhere close to 18%, which it was pre-war era. So in terms of margin profile, we are moving pretty well, and therefore, the growth can continue from here.
All right. And what about your long-short performance? Just wanted to understand, a lot of the mutual funds that a lot of people invest in are fundamental long only. And that's like saying that a batsman is making runs only on the offside. How about long-short performance? Do you think there's a case for that where you make runs on both sides of the wicket?
Yeah, Mangalam. So that's a very good point. And actually, it is very important to understand that gone are the days when, markets can actually continue to rally for 3, 4, 5 years. and you will always have these kind of cycles. So if you look at the data point, we hit a high of 18,600 somewhere in October 21, which was almost 19 months back. And most of the, I would say, the large cap long only funds would be broadly flattish versus that period. But a point in case is that long short funds tend to manage risk pretty well, and also they have a certain strategy in terms of how they want to allocate their overall exposure. So for a fund like ours, our long short fund, which is Edge, I can just share some data point with you. That in October 21, when, as I said, Nifty was at high of 18,600, our NAV was, we were up around 22%. And even today, after 19 months, when the Nifty is still trading at the same level, back to the same level, our NAV has moved to almost 38%. So there is a 16 percentage points alpha on Nifty over a period of 19 months, which is possible mainly because, you end up managing risk pretty systematically and also have a proper allocation to the growing sectors. So that is the kind of outperformance one can expect from these kind of long short strategies.
Right, Ajay. Thank you so much for joining in and giving us your views on a whole host of sectors, stocks and market positioning as a whole. We will continue to monitor these trends as we go along. He is increasingly getting constructive on the IT space from a 12 to 18 month standpoint, but we'll have to monitor the upgrade to downgrade ratio coming in out there as well. Believes in the case of both long short funds as against just fundamental long only. But remember, this is a business of specialists itself. Not everyone can go ahead and short stocks because that's one of the tougher things to do. But 3 p.m. move has happened on the
downside.
Nifty mid-cap index. The Nifty is at, has seen a bit of a downtick and closing in on that 18,500 mark. And on the other hand, you have the mid-cap index, which has moved to the high point of trade. Now, needs to be seen how much of this mid-cap index move is on account of the weekly mid-cap index options expiry, and that's largely because, it still hasn't picked up in volumes as the Nifty Bank weekly options expiry or the Fin Nifty expiry every Tuesday, but it is still, becoming a little popular by the week. So the mid-cap index has moved to the high point of trade, even as we see a bit of a decline on the Nifty, Prashant.
I mean, if it has options, give it time, it'll pick up. Right?
It will.
As we've seen over the last couple of years now. Very stark kind of graphs on your screen there. Mid-cap index surging in the last 10 minutes and the Nifty actually going the other way, completely the other way. We are now, I think, not at the day's low, but not very far as well. The Bank's index, the Bank Nifty is a little more mixed. It's not as pronounced the last 10 minutes of price action. There you go. So that is still holding. It was recovering starting about 210, 215. And the direction is not completely reversed like it has for the Nifty right now.
Yesterday there was an interesting wordplay Manisha and I were having about, Manisha was speaking about commodity derivatives, but she said that earlier futures was the only option and now options is the future. Largely because even if you look at the NSE itself, with these weekly options expiries that they've introduced, now almost 80% of the volumes are coming in from the options side as against the futures side. Of course, majority of the volumes still futures and options, which is over 95%, but 80% of that is options. So definitely, if it is an option, like you said, that is the future.
It'll pick up. So, and 10 years back, Mangalam, it was exactly the opposite. It was singles, index futures, stock futures, never stock futures actually. Index futures were the big thing, almost 80%, and now it's completely flipped. Just in a matter of maybe less than 10 years, I'm taking a point-to-point comparison. But this has really picked up in a big way in the last 2 or 3 years or so. We'll take a very quick break here with news that the Nifty and the mid-cap indices are going in opposite directions. Nifty down, mid-cap index at the day's high. We'll come back. We'll get you buy or sell, short-term buy or sell trades for reverse trades tomorrow. Our technical experts will be with you to help you with that. We are back in just 2.
Welcome back. 18,533 in the Nifty. We're down 100 points. The mid-cap index continues to mid-cap index continues to soar in trade, and some of the big winners include a Jindal SAW that's gained about 10%, pretty large volumes on that. Marksans Pharma has been gaining for the last 2 days. Today it's up 5.5%. This week, in the last 3 days, the stock has seen a gain of close to about 15%. Thereabout. So that's been a big mover. Zomato has seen a big intraday spike, so pull that up. And Kotak Mahindra Bank, or even a Yes Bank. So many of these, private sector banks, look at that intraday spike that you are seeing in, some of these names. Kotak Mahindra Bank, Yes Bank is something which deserves mention. IDFC First Bank too is, recovering all of its losses and is now on the verge of breaking into the green. Midesh Thakkar is with us to tell us what you can buy or sell today for a reverse trade tomorrow. Midesh, we're seeing some very unusual spikes, for a Friday afternoon. What's happening? Sorry, for a Wednesday afternoon. What have you made of what we're seeing right now in these individual stocks, or even on the index level? These vertical up moves, vertical down moves.
Actually, slightly surprising, the kind of choppiness. But the overall bias still remains that the market will contract. I think, it may get choppy within a range, but I'm not looking at expansion happening or new highs being made immediately. I think some kind of consolidation is more likely, given the fact that most of the hourly and the 2-hourly charts are suggesting, indicators cooling off. So in that sense, it can be choppy, but overall bias isn't very positive. I have STBT on LIC Housing Finance. I think that's a stock which is now showing some signs of intraday negative signals crossovers. So STBT here with the stop at 375 for targets of 366. And Kotak Bank, surprisingly, I think big rally happening in the last few minutes, but that could be a BTST with a stop at about 2009 for targets of 2050.
Midesh, do you see any opportunity in the mid-cap end of things? Because I'm just looking at a bunch of these F&O names. Even as the Nifty has come off the highs, seeing some support because of the Nifty Bank and Kotak Mahindra Bank, we have ABB India, which has seen a vertical spike in just the last few minutes. Nippon Life, that's moved higher. We have Indian Hotels, which has moved higher. Coforge, all these stocks. In fact, even SBI Card and Petronet LNG. So all the moves that we've seen in the mid-cap end of things, they've been vertical. It looks like someone just pressed a bit of a basket sell on a bunch of these F&O stocks. Do you think they provide any trading opportunity?
I think a couple of them do, actually. The breadth isn't looking bad, and that's why my belief is that this entire contraction will not be a big correction, but more of a consolidation. I think, you were talking about Nippon Life. I think that's a very good chart from a trading point of view. The only reason I've not covered it for as a trading call right now is the 200-day average, which is at about 253. And once it clears that, I think, expect more rallies over here. Easily, I think the stock can possibly head towards levels of around 270 in the coming few weeks. Intellect is something which is also on my radar. Again, a very good chart. It's getting, very strong on the closing side. I'm looking at a position target of around 620 here. And ABB India has been making new highs, so difficult to buy right now given the fact that the last rally started from 3180 and it's nearly about 1,000 points higher from there. But if somebody's holding the stock, the structure still remains good. So trade your stop loss about 40, 20 and just maintain long positions.
All right, Midesh, thanks a lot for that. So that's a bunch of stock ideas for a reverse trade tomorrow. Rima spoke about Zomato. That's seen an up move. I'll be awaiting some data coming in from Zomato on the kind of ordering that we saw on both their platforms, Blinkit as well as Zomato food delivery, largely on account of the IPL and IPL finals, which went late into the night, day before yesterday as well. We did see some tweets come by from the management of Blinkit saying that a bunch of chips were ordered, a bunch of cola, etc. were ordered on the Blinkit app as well. Let's see how many people ordered the whole hog, the food, etc. as well. So that's something we will monitor. But that's not the only data point that we'll be monitoring. The important one, and that is the fourth quarter GDP. That will be released today at 5:30 p.m. In fact, not just the fourth quarter, but the entire fiscal year as well. The CNBC-TV18 poll sees the fourth quarter GDP coming in at 5.1% versus 4.6% in the third quarter. Lata has more.
Yes, sir. The GDP poll, as you have just said, indicates that the Q4 number will come in at 5.1 compared to 4.4 in Q3. And the full year will come at 7% compared to 9.1% in FY22. But the big thing that I want to tell you is, like the Reserve Bank governor, a large part of the market expects that it is going to be better than this. 7% is the least. It may even come at 7.1 or more. Now, the big four categories that have helped to push the GDP are agri, which is expected to come at 3.7% or more. Power, where clearly there has been a lot of consumption, that's expected to come at over 6.5. Power, utilities, gas, everything put together. And then Trade, hotels, transport and communication, another big category, services category, is expected to have grown by at least 9-10%. And finally, financial services, banks, etc., also have seen decent credit growth, would come at between 6.5% to 7%. But, these numbers are a bit dibbly-dobbly because the NSO may revise the base years, the previous year's number, because of additional information. So people are not betting on these numbers. The more important number that they will look out for are 3, private final consumption expenditure, which shows the consumption strength. It's expected to come in very bad at about 3.3, 3.4. If it is better than that, the market will be elated. Government final consumption expenditure expected to come about 5.2% for fourth quarter, and capital formation is expected to come very good at about 6.5 to 7. So personal consumption and capital formation will be very closely watched.
All right, Lata, thank you very much for that. So this is something we will pay close attention to. Now, AMFI's semi-annual review for reclassification of market cap will be released in the first week of July. The cutoff date for the same will be 30th of June. Vivek is joining in to tell us what is likely to take place, what are expectations, what will move from the mid-cap to the large cap, to the large cap to the mid-cap, and lower down the curve. Vivek, over to you.
Well, absolutely right. So, we are expecting this particular info from AMFI by the first week of July, and the cutoff date, like you mentioned, is 30th of June. So, what's actually happened is that analysts now start penciling in the kind of expectations and, likely, up move in terms of classification of market cap, especially for mid-cap names that are likely to move into the large cap space. What is the impact of this? Typically what happens after such an announcement is that equity-oriented market cap classification focus schemes will most likely go ahead and realign their holdings on the basis of the classification that is provided by AMFI. On the back of that, you could see some flows coming in or going out of stocks, depending on whether it's an upgrade or a downgrade. We are highlighting some of the important names, especially stocks that are likely to move from the mid-cap to the large cap. The expectations are from IIFL Alternative Research, Canara Bank, TVS Motor Company, Tube Investments, Shriram Finance, some of the key names. Mankind Pharma is another likely entrant into the large cap space. So these are stocks that will move from the mid cap to the large cap. Of course, Mankind Pharma is the recent listing, so it will directly make its entry into the large cap as per what the expectations are. On the other hand, likely migration of stocks from the large cap to the small cap space. Page Industries is one stock that could see its market cap classification get downgraded. Also, other names like PI Industries, Info Edge could also see some downgrades. On the other hand, some small cap stocks that could migrate from the small to the mid cap space include names like Punjab and Sind Bank, Bank of Maharashtra, FACT, as well as Bharat Dynamics. So these stocks too could see an up move as far as the mid cap space is concerned.
Thank you very much for that. By the way, today there have been a slew of large deals. So when the FII and the DII inflow numbers come out, just monitor for the fact that there has been about a nearly 1,000 crore deal on Sona BLW, a 2,000 crore deal on HDFC Life because of the Aberdeen AMC clean out trade. And plus right now, there's been about a 2% block deal taking place in Max Healthcare, which in itself is above 1,500, about 1,500 crore rupees. So there have been quite a few block deals which have taken place. Slip into a very short break. We'll come back and talk more on the markets. Mayuresh Joshi, William O'Neill will join in next. Welcome back. I think I've solved the mystery of these big moves that we're seeing in the last few minutes. Well, it's that MSCI rejig. All the stocks where you are seeing that big up move or down move is courtesy the MSCI rejig. So I was just comparing it versus expectations. So the changes in the MSCI Global Standard Index will be effective from today. So names like Sona BLW are expected to have an inflow of $170 million. The Sona BLW, for instance, was down through the course of the trading session because of the sale by the promoter. But now in the last 10 minutes, on the back of this expected inflow, weightage inclusion in the MSCI Global Standard Index, Sona BLW has seen buying. Another one, Hindustan Aeronautics. This one too is going to get included in the MSCI Global Standard Index, and that's expected to have an inflow of 196 crore. Certain other certain other companies like a Kotak Mahindra Bank is expected to have a weight increase. Zomato is expected to have a weight increase. And that's where you are seeing a lot of the buying interest. And I think the list goes on, but just monitor the up move versus the MSCI changes, and you would see the 3 p.m. move.
Perfectly explained, Rima. Thanks a lot for that. In fact, that explains why we are seeing these unusual moves in a lot of these stocks. Kotak Mahindra, top of the list out there with nearly $800 million coming in terms of flows. Mayuresh Joshi is expected inflows. Mayuresh Joshi joins us now. Mayuresh, we're seeing big moves in a bunch of these stocks. Do you think any of these deserve chasing from a long-term standpoint? If the MSCI index thinks they're worth putting in their index, do you think it is worth putting in one's own portfolio as well? I ask specifically in case of Kotak Mahindra Bank and Zomato, both of them.
Afternoon, Mangalam. No, I think the numbers have been pretty reasonable for both of them. Having said that, our own sense in terms of the banking stocks itself, IDC First Bank is something that we have already recommended to our clients. I think a stellar set of numbers by this mid-cap private sector bank. And therefore, I think if you look at a whole host of parameters on the banking side, a few of the stocks that probably get shortlisted on our buy watch lists might include stocks like an ICICI Bank and a State Bank of India, which is obviously ex-dividend today, which probably might probably come through. The next leg in terms of QSR and Zomato in general, my own sense in terms of how these numbers delivery has been, specifically for QSR players, has been reasonable enough. For an aggregator like Zomato, I think you just mentioned the IPL finals as well. I think those numbers, I'm waiting that tweet as well. But largely, I think we will not be looking at Zomato at this point of time. Maybe a few names on the other banking lists, including ICICI and SBI, remain on our buy watch list.
Okay. Mayuresh, so that's about Kotak Mahindra Bank as well as Zomato. What about something like Dixon? Dixon has just announced that they are planning to partner with Xiaomi, and Xiaomi, we know, is one of the large manufacturers of smartphones. Many people in India are using Xiaomi, and now Dixon will be supplying them equipment, and the stock is excited. It's up close to about 5%. The stock had a phenomenal up move, say about 2 years back. After that, it saw a bit of profit taken. It's consolidated now. At these levels, how would you rate, Dixon?
So on the O'Neill lens, I think we'll still wait it out, Rima. Afternoon to you as well. Our own sense in terms of the agreement that you've probably done might turn out to be a good opportunity in terms of overall volume growth and the sales figure in terms of revenue numbers as well as we move forward. But a large element in terms of their business is still margin restrictive. So I think the margin expansion can only come through as more and more of their ODM activity starts building up quite significantly, which is going to take time. So I think not expecting significant amount of margin expansion happening, which means operating leverage cannot expand beyond a certain point of time. It has remained largely stagnant over the last few months or underperforming of sorts. I think I'd only probably like stocks which have a strong EPS and an RS strength. I think Dixon lacks that at this point of time. So I think there are better stories than broader market that we probably.
Okay, all right. My very short chat, but good speaking with you. Appreciate you joining in with that perspective this afternoon. Well, we're just about a minute away. We will end 120 points lower on the Nifty, and the banks, which is by the way a 0.6% cut. The bank Nifty will end 0.6% lower as well. That's about 270 odd point cut there. Mid cap and small cap indices will do much better. The mid cap index came off that surge which we saw, but still ends higher. The small cap index is the one which really stood out with a full solid 1% gain, almost at the day's highest point. Rima.
Well, some of the notable large cap movers. Tech Mahindra is finally the top Nifty gainer, up 2%. FMCG had a good day, barring something like an ITC. So Asian Paints up, Britannia up, Titan up, HUL also closing up in the green, Sun Pharma gaining, and HDFC Life higher in trade. On the losing side, ONGC ends with a cut of about 3.5%. Softness seen in many of these commodity names, perhaps to do with the weak China data. Hindalco Tata Steel under pressure, and Reliance Industries too takes a bit of a knock.
Last hour belonged to a bunch of these MSCI related moves that Rima just pointed out. We saw a big move in Kotak Mahindra Bank. Bharti Airtel actually from the front line was one of the big gainers, but Zomato ended about 4% higher as well. All in all, a decent day of trade, some profit booking, but at the same time, we did see a bounce back from important support levels. So a day of moderation, a day of profit booking, a day not really to worry. With that, we wrap up on this edition of Closing Bell. But you stay tuned to CNBC TV18. On the other side, we bring you an exclusive conversation with the chairman of Vedanta, Anil Agarwal.